Hello, good afternoon. It's Adil here, bringing you a review of the European markets for the trading session Monday, the 27th of September 2021. Apologies for my disappearance, but hopefully back up and running now, giving you a view of the end of market wrap up in terms of the European markets. Then, okay, so basically, in terms of the indices themselves, they certainly have obviously relatively eked out small gains. We've got the FTSE up just 11 points, but it was up a astronomical, I think 7120 high. I think at one point, German DAX certainly has given back some gains, and the Eurostoxx as well. But certainly finishing positive overall. Currently, the S&P is certainly negative, and we've got the obviously Nikkei certainly negative overnight. Okay, so in terms of the fundamentals, then basically we had the scenario with oil prices obviously pushing higher on the back of concerns regarding supply in the UK, whereas the rest of Europe is perfectly fine. Post-Fed, the market certainly seems to be playing the reflation trade. Whether that's valid or not is a different, obviously, story altogether. In terms of Europe, the big catalyst really, or political catalyst, was the elections in Germany. Again, the stalemate there in terms of any sort of collusion or potential, obviously, two parties merging with regards to CDU, CSU, I think there is. So again, certainly something that you need to look into. I think Kathy Lean's got a good take on that in terms of the potential positioning with regards to Germany. We've got slim lead for the SPD, centrist government likely, final rules most likely Monday, coalition talks could take weeks. So again, any sort of political uncertainty is generally risk off for stocks. I think we had Lagarde as well, or same old speech with regards to inflation. It's only temporary, it's transitory, etc., etc. Central banks are desperately trying to obviously talk down inflation. We've got concerns with regards to obviously the gas and electric energy costs rising. Okay, that's triggering stagflation. Chinese concerns overnight, potentially capping, or not potentially, but they are capping obviously energy consumption, and again that certainly doesn't bode well for economic growth going forward. And that reflation trade certainly is certainly being questioned. So where do we go next? That's the question. Yes, indeed. So let's try and answer that with you, folks. Okay, so let's try and cover that in terms of the FTSE first of all. Let's just look at a technical picture so you're ready. Okay, so the FTSE certainly gapped higher initially, up to I think it's a bit high of 7120, potentially even higher in the futures market. Obviously gave back the gains, closed the gap, and actually retested the low at 7045 before it obviously rallied back up 7075. So from my perspective, the FTSE definitely is weak on a technical picture, or a double top on a 10-minute chart. So the next potential gap fill now is opened at 6980, and that's what I'll be targeting on the downside. FTSE obviously gapping high on the back of stronger oil. So let's quickly bring up a chart of oil here, folks, because the chart of oil is quite instrumental here. Okay, so as you can see here, daily chart of Brent breaking out. We're hitting or approaching the $80 level. Okay, in terms of Brent, let's go to a 4-hour chart. Bit of a topping tail here at the moment. Let's go to a weekly, and the next potential resistance is seen up here. Let me just try and clean this chart up for you as well. So the right trend lines. Okay, so this is your key level, which is around the $80 level. Okay, in terms of Brent, obviously if you break that, then you're bringing into the equation these potential highs. Now again, the question really is, are we in a commodity super cycle? I think cotton hit a new high today as well, and we are now into resistance. So can we sustain this move? Obviously the competition, I think there was a ruling regarding the competition in terms of price setting, etc., certainly being removed. So again, could this obviously trigger the rally in oil? So again, keep an eye on that in terms of the markets. Let's just quickly bring up the commodities index. This is going to be quite interesting. Okay, so commodities index here as well. So let's just quickly go to a daily chart, and we are now hitting that key resistance zone. So is whether we can sustain this move higher. This will be interesting to see what the next move will be. Obviously with regards to China capping its actual consumption of energy moving forward. Again, in terms of semiconductors as well, there's a concern there. So obviously restrained supply, cost push inflation, as we all know, triggers stagflation, and obviously risk is negative for commodities in general, and obviously negative for equities as well in terms of global growth. So this really is a concern. We have had some central banks obviously talking about raising interest rates because of inflation. So again, the potential musical chair party certainly is coming to an end. So watch out there. in terms of the next potential move. So going back to the FTSE 100, 10-minute chart is indicating a double top at 7120. Again, looking for target gap fill at 6980 below, and that's my trade. Hopefully in the next 24 hours is all about getting that perfect entry. 60-minute chart on the FTSE, certainly a topping tail, again at double top at 7120. Previous support equals resistance around the 7130 zone. From my perspective, you've got key support now on the downside at 7,000, again always a psychological level, and then you've got free fall all the way down to 6,830. Now, the incompetent government that we have, unfortunately, at present, and I've said this multiple times now with regards to the Tory party, I mean, there's shortage of food, there's a spike in energy costs, obviously going into the winter, it certainly doesn't bode well. This is all mismanagement to a large extent, and obviously now we've got this fuel crisis with a potential army now coming involved now. I've been reading articles on the Independent and Guardian indicating that essential workers should obviously get access to fuel first, and obviously motorways will be the importance, given the fact that obviously the HGV drivers need to transport food. So certainly isn't a good time given the carnage and chaos, etc. I think Mr. Bailey has also indicated a rise in interest rates given the inflationary concerns. So that certainly doesn't bode well, and you are looking at potentially hawkish BOE. Now let's have a look at the chart of GBP USD, which would be quite interesting. So again, yeah, certainly looking quite bullish on the 60-minute chart, certainly pushing higher here after those comments. Okay, certainly seem to have made a base at 1.136 and now looking to potentially test the 1.39 level. So watch out for that. In terms of the FTSE, there's an inverse correlation always with regards to the exports and obviously the currency itself. Okay, so let's just go to a daily chart now. Now the daily chart is a bit of a conundrum because we've got a bull flag scenario. We're consolidating within this green candle here. Obviously we've got two topping tails now, so that's a cause for concern. Do we go back now, test 6,850, or do we push higher to test 7,200? Now, given the Chinese concerns that we've got in terms of stagflation, in terms of lack of growth, in terms of obviously a reduction in supply, curb in commodity consumption, that doesn't bode well for the FTSE, given the fact that it's a commodity index, and therefore you are looking at risk off. That's my interpretation. Okay, 60-minute chart I've already covered, 10-minute chart I've covered as well. Let's just quickly cross-reference that with the FTSE 250. Again, this is crucial. FTSE 250 has been very weak today. Obviously we pushed higher, then we pushed lower. The initial obviously bullish momentum failed. Now we've got a bearish engulfing candle, we've got an inside bar, and potential lower high here, and testing 23,000 on the FTSE. So again, that certainly indicates bearishness in terms of FTSE. Oil price into resistance, commodities into resistance, GBP moving higher. Everything doesn't look good at present. Okay, so in terms of the European equity, let's have a look here. Start off with the bird's eye view as always. Now we've obviously retraced post the Evergrande sell-off, and then obviously the reflation trade or buy the dip mentality, given the ECB obviously remains always in a hawkish stance now, or should we say dovish stance. Okay, so we've retraced fib 75%. We failed to push any higher so far. Obviously any pop high today was sold quite considerably. In terms of the 60-minute chart, okay, so you've got resistance that certainly seems to be holding quite strong here now, so potential hot solid resistance. We failed to close a gap up here, doesn't bode well. So you've got one level of resistance, next level of resistance, and then obviously another level of resistance. So certainly doesn't look good in terms of the German DAX here, given the political uncertainty as well. 10-minute chart definitely looks weak. We failed to close a gap though, so that's relatively positive and strong. Okay, so bear that in mind in terms of the German DAX. But again, any pop from my perspective, especially in the FTSE, certainly is a shorting opportunity, and there's multiple gaps on the downside in terms of the German DAX, and obviously we've held resistance here. Okay, so looking at the daily chart now, German DAX again going back, fib 61, 75% resistance, and what you're seeing right now really is one big head and shoulders formation. Okay, so I hope everybody can see this. Classic sell-off. And is this the equity market top? Certainly could be, given stagflation. Okay, and obviously the right shoulder at the fib 75%. So very bearish from my perspective so far in terms of the German DAX. Okay, let's look at the CAC 40 now, folks. Okay, so daily chart, always bird's eye view. Okie dokie, so we've bounced off the gap fill there. Okay, bottoming tail so far. Okay, we're holding gap fill resistance here. If you use our fib retracement tool, you're holding that fib 61% resistance. You've got resistance back up here. Since we closed the gap at 6,700, it remains weak. Okay, let's go to a 60-minute chart here. Okay, let's just get rid of the volume. Let's get rid of this and this for now. Okay, right, let's just look at pure price action for now. Okay, so in terms of the French CAC, obviously we've got resistance. That certainly seems to be holding at 6,720 and then 6,700. We've got two unfilled gaps below, and given the energy crisis, given the concerns regarding Chinese growth, certainly a strong argument for that to close. Okay, so watch out below. 10-minute chart again remains lackluster, lower high. We've got key support in this zone here, and you've got gap fill support here, and the next gap fill is certainly down below. So looking to target that zone here at 6,550 on the French CAC. Now, bringing up the chart, the Eurostoxx. Now, Eurostoxx is probably the strongest out of them all, but nevertheless, the daily chart has held fib 75%, so remains weak. Okay, so again, looking at lower high, and the 60-minute chart, as you can see here, it's consolidating after hitting that for key resistance at 4,200. What would now potentially expect a gap fill at 4,100 on the downside, so certainly looking at a potentially bearish view in terms of the Eurostoxx 50. So as soon as we close that gap today at 4,195, looks like we sold off and closed the gap below at 4,160, and obviously key support is at 4,150. If that breaks, and you are looking at support at 4,100 on the downside. Okay, so I hope I've given you a comprehensive insight there in terms of European markets for the next trading session. Keep an eye on that H&S formation of the German DAX, folks. It doesn't bode well. Political uncertainty in Germany, potential ECB possibly turning hawkish, given the fact that the BOE and the Fed have turned hawkish. So interesting nevertheless. Okay, so I wish you the best in terms of trading day tomorrow, and hopefully going forward these will be daily videos giving you a market wrap. Any other potential areas you want me to consider, then please do email me at daytrader at inter-market-analysis.com. So again, that's daytrader at inter-market-analysis.com, and I'll certainly be able to respond. I'll try and add it to a link to the video, or I'll add the email address there. Certainly try to contact me. Contact me via Twitter as well. Sorry. Contact me that way as well. And if you want to join the live analysis service where I run the my live trading service, again, contact me. I'll add you to that as well. Just basically send me an email, or you can obviously contact me via Twitter, which is at trader_adil, and I'll be happy to help. Add you on there for a trial and see how that goes in terms of your trading obviously ability. And those of you that want to learn further, then I do also run a mentoring program as well, and which is usually run over 4 weeks via Skype on a one-to-one basis. So again, get in touch with regards to that too. Take care. Goodbye.